morning. Okay. All right, so starting a little lower. Let's hope so, Dan. I mean, I'm in ahead of you guys, so I need some assistance there to lift it up. Anyway, so down we go a little further, testing the lows. And good morning, Alex. And let's see. Oh, by the way, guys, Dan had mentioned about coaching session yesterday, and there is a coaching session, but it's next Thursday, and you should all have that email because I sent the link to Dan's coaching session for the replay, and at the bottom of that is the link, if you didn't get it, that I sent out previously to next week's coaching session. So that should be in your inbox. If not, let me know, or it's not, it should be in your spam, but any of you that are in here certainly should be getting that email. Okay. All right. All right. So I'm starting out with the spiders here, and, lower high, lower lows. So in any way, coming to the downside there, it never traded above a prior bars high. And that is part of our systematic analysis of support and resistance, in that even while it's in an uptrend, we still needed to trade above a prior bars high to trigger an entry once it comes down toward minor support. So yesterday, when it dipped down toward that minor support in the rising 20 MA, buyers stepped up, and now this morning they left. So you can see the hourly still in a downtrend, lower highs and lower lows. And now down at 286.84. 684, just below the 20 MA and into this area. So, forgetting the news, yada, yada, looking at this, like a 5-minute breakdown failure would be an aggressive entry, pulling back here. So, if it would stall, right? Maybe something like this, since I don't have a 5-minute here, something like this possibly, where, it's grinding down and it breaks below several lows and then turns into a bottoming tail bar. So there are a lot of different variations. It could be a breakdown bar, a red bar, that results in a green bar back up. It's all about retracements with candles. Does the tail coming down to the gap mean it could bounce? Well, Brian, just as a general technical principle, is that anytime prices are in an uptrend and they come down to a reference point of support and they form a bottoming tail bar, it communicates to us that buyers stepped up and then it could bounce. Now, our approach is one that says, okay, that's one part of the analysis that says possible long entry here. Obviously, there are buyers that are just buying the support, looking for a better return on their money, that they're in from a lower price, and that, of course, if they hold on to, long enough, meaning, okay, so we were to buy, say, above this bar's high, and they bought down at the bottom of the bottoming tail bar, and we both held to up here. Obviously, they make more money than we do. So they're more aggressive in their buys with the assumption that this is a good place to buy, that support area, because of the uptrend. Now, this morning, they're wondering, hey, did I do the right thing? And, well, no. I mean, this pattern typically is going to result in a turning day. Right? So yesterday, pre-market, I said that yesterday could be that turning day, and it tends to be a treacherous kind of a trading day as prices attempt to turn around. And there were obviously attempts to turn around yesterday. Uh, and now, it hasn't been, it's obviously not traded above the high here. So we're back down here and there'll be more attempts to turn around. It's just the way things work. And then traders find out whether they're right in that moment. So we're watching those patterns. And what I said was, okay, we're down here again. This kind of a pattern would make sense for a turnaround. It even could be something like this, so it's going to gap down at the open, right? Because there isn't it's not a 24-hour chart like the futures. It's going to gap down below yesterday's low, which could result in a 5-minute bar that looks like this, which we should consider buying that. And with an ample stop, giving it some room, maybe not just below that bar's low, but a little bit further than that. You can see I've got another line here where these clusters of opens and closes are together. So we'll see. Maybe the first 5-minute bar is a red bar and it just keeps dropping. So our beginning assessment is the trend up, down, or sideways. If it's up and pulling back, is it near support yet? Or a widely followed moving average, or both in this case? So we'll see. The goal here for us as we do our analysis, and I'm explaining it, and it's always been, my goal for myself to try and make what I look at as black and white as possible, right? The more gray areas there are, the more it's like, well, what if this and what if that? Versus, hey, this is black and white right now. It's in an uptrend. It's pulling back to support. It should turn based on that. Now I need a picture that tells me that buyers have taken control. So now here's the S&P futures, and we can see the same way, it's coming down. It's lower highs and lower lows. We've talked about, the hourly trend picture in relation to the daily trend picture for a couple of days, and it still hasn't violated the downtrend on the hourly time frame. And we talked about, going sideways and then eventually turning, and, that was starting to happen here. It was starting to, happen here, but it couldn't make the turn. So now we're back down again. Are we sideways and lower to the 50? Or, what I think is more likely, just because it's a bullish market, is over here. Now, one of the things that, we look at, and it didn't happen yesterday, while that put call ratio got to 1, even during all that selling, and even the day when, day before yesterday, I guess it was, where a lot of these things came down in big red bars, put call didn't get up to like 1.345, which would have been, yes, this is exactly what we need. It hasn't happened. Maybe today's the day. So we monitor that market internal in addition to the price patterns and the location of price. So we'll see. We'll see. So this is coming down to an obvious point where buyers should begin to step up, and we'll look for the same type of pattern. Qs coming down to the 50, widely followed, and I look at the angle of retracement here, and the thought that comes to mind is there's no way today is going to be like the day that we probably, I don't think we'd want to enter, meaning it could turn out to be the green day, but based on the angle of retracement, this type of pattern, even if it pokes down to here where buyers will begin to step up, you typically need another day. And that's, again, the same concept of the daily chart needing another day and the hourly chart beginning to go sideways and then begin to turn around. The Dow's been holding up better than the other two, more of a sideways chop. And so you see that sideways chop here, and it'll be interesting to see if this actually begins to hold or can hold. And, does this stay in this area? The S&Ps are coming down to that area of support, as is the Qs, So a couple of things can happen, meaning this holds here and it turns around another bottoming tail bar and gets turned around. I've also seen this kind of a pattern as where the Qs and the S&Ps make what looks like a climactic or nasty kind of dip into that support, and then the Dow kind of gives it up right at the end, and maybe it pokes down here, and that turns into a bottoming tail bar. Um, you know, so just trying to explain different price patterns that typically play out. Just to get ready, we'll see which one actually forms. Bonds are down, ugly red bar there. That suggests it's going down to this low. Yields are going up, and we'll see if the financials, which are actually up here a little bit, right, getting the benefit of that, and we'll continue to see if this, choppy consolidation that's still, it's in the area of the top of what was resistance and where prices had fallen each time before, and they're actually holding up here. It looks kind of a mess. It is. But if this can turn into a bottoming tail bar, that's going to be exactly what should happen based on those bond prices going lower and yields going up. And as I said yesterday, the interesting part was these utilities, moving up, and they're down a bit here. And that's what's supposed to happen when yields go up. But, it's rather interesting that they've been able to show this kind of strength and push up like that with, yields starting to work their way back up again. And gold down, probably at least has to come down here and test it. And it's in this support area where this green line is, but we'll see what it is. And I have no interest in it, and I haven't for a long time. And the gold miners, just why bother? And it just keeps working its way lower. So at some point, it'll turn around. And oil coming into this little, see where these bars are overlapping here? And do I have a longer time frame? No. It's really not opens and closes because there are no opens and closes. There was a big gap reversal day, which is it's right here and here. So what we need to see here, because of this choppy advance here, is some type of W bottom, which could happen on this pullback. The extent of this pullback is about as far as it should go if this is actually going to turn around based on this advance and a ability to push this far into this prior high. Yeah, I'm about done here. We can take a look at that for a sec. Okay. Well, it's more of a shock pattern, I would say, Alex, because it was going down and you've got a wide range bar of volume did happen. So I would call it a pro gap because the extent of this downtrend and this pattern here, and then gapping above that high with that kind of volume, it is suggestive of this being a bottom, the start of a bottom. Obviously, it has not taken out major resistance. So at this point, can it even get above yesterday's high today, which would continue to be a positive sign? And then if it retraces up to here and ultimately takes it out, that's a good sign. And I'd want to look at the weekly to see the location of where this is happening. But, these bottoming patterns, they take time. So even a gap on this kind of a volume like this, it could take a few months of, chopping around before it's like, oh boy, this is really something that could produce some gains in a momentum way. So I'm not really loving this, topping type of a pattern. There's nothing of real significance here. There's these pokes down here. So here's one of the concepts, because from MTS, meaning we always look for support to be where prices are. But, over the years with that idea of, hey, there's got to be price support to the left for the turn to happen. Well, in reality, it doesn't have to be, but that's the ideal. So how do I deal with that? Because, after seeing prices actually go up and there was no support, well, that becomes, what do I need? Well, if it takes out major resistance, I can buy the next pullback higher low, still recognizing that while the downtrend is broken, it's not an uptrend, and it's been weak. The other way is that it comes down and retests. This forms a pivot. And if you were in my webinar the other day, I said, define what's a pivot? A bar like this with 3 higher lows to the left and right. Now you've created support, and if you can get a retest, that creates a W bottom, and then you have a higher probability bottoming pattern that has created support that could result in a move up. Got to get going here so Dan can go. Bottoming pattern is pretty messy. We actually talked about this here for a bull put credit spread, but we didn't do it, and it would have worked nicely. Woulda, coulda, shoulda. But I think it's got some more work to do. It's coming up into resistance now, but it's looking pretty interesting. Maybe, here's an example. It was into a void, spike down, bottoming, little tail here, where maybe McDonald's could be on its way back up again. And in part, does the euro, is this a bottom here and start moving up with the dollar's going down, which would help McDonald's as well. So that's it.